Good afternoon. Welcome to OptionsTender. It's Friday. Welcome, traders. February 7th, 2025. We're going to take a look at a lot of weekly time frames just so we can get a gist of what the candle, the ending candle, getting some reverses here. And I suspect we'll get some follow through next week. Okay. A reminder, we'll start off with this SPX on the monthly to show you where we are. I want to reiterate the trend line that we've been rejecting off of and talk about, just mention that while we're at these all-time highs, while we're at these historic trend lines, we've already had all of the recession indicators indicate that a recession is here or near. The SOM rule, the Buffett indicator, and you can look these up. The 2 and the 10-year yield on inversion. They've been inverted for quite some time, and they uninverted last winter, or I should say fall, and more recently the 3-month and the 10-year. There are more indicators. All of them have come through to let us know, to give warning. Okay, so while that's happening, we're here at the SPX 1929 trend line top, 2000 top, 2025 top. That's in confluence with 2008 top, 21 top, and now. Okay, I know that we haven't had any follow through yet, but that is inevitable. All right. By the way, we're doing this noon Eastern Standard Time intraday. If you want to get these videos intraday, consider becoming a YouTube member. It's 99 cents a month, and it comes with the Discord trade alerts. Just trying to get this stuff out to you, trying to get this great information. We have a Discord that comes with it. Good times in there, trade alerts. We get to bounce back and forth ideas, a little bit of humor too. So, anyway, let's go to it. If not, the video comes out at 4 p.m. to the public for free anyway. All right. So looking a little bit closer into the candles at this confluence, we rejected 1, 2, 3 times, and then this last time we didn't make quite 2 there, I don't believe, but we have an inside month so far, so that's something to look at. We have plenty of time left in this month, so we could get a reversal here. I do think that's going to be the case, even if we come all the way down to 5,800. That's where the 8 EMA is, maybe spike through it or so. We'll look at some levels. We have a little bit of consolidation here, so let's check out the 557, about 56. You know what, I like this zone right here. Okay, so 56.60, I think that coincides with what we're talking about anyway in the lower time frame. So you have the top of the wick here, and then you have a breakout here after a retest, a breakout, if you notice, around that 56.60 area, we'll call it. Okay, let's go to SPY. Just a different look here, but SPY doesn't have the information going all the way back. Now we outline the consolidation area here, and clearly most consolidations end up with a resolution to the same direction that the trend is going, right? Well, the opposite happens when you're reversing, and I think that's the case here. Looking a little bit closer, I said watch the area where these monthly candles reject and wicks. All right, and I think we said around 603 to 605. And, same thing, wicks. So clearly, if we break out from the zone and get above these trend lines, then that's another breakout, right? But we can't accept that until that happens. I can't. I'm trading my back against the trend lines, so I'm bearish. If and when we get above this trend line, then maybe we can talk about something else. But then you have more divergences and stuff, so can't promise you anything on that. All right. On the weekly time frame. On the weekly, we're getting these rejections again. We have this big level that we put here just to show where that zone is that I was talking about, the 603 to 605. Again, rejecting off of there, getting a possible reversal candle. So far, holding that point. So if we reverse from here, we should see some follow through. This 20-week moving average is super important, so we'll be watching that to see if we get down to the levels I was talking about. And I think that coincides very well. Right here was a breakout back test. It's a little easier to see on this time frame, and that's the we'll call it 560 zone. And you'll see why when we get a little bit closer. But you have a 50-week here. That's at the 555. So clearly this trend line in the 20 has to break. And I think we make it down to this point here. Now, if we get a massive run after that, maybe we get that kiss back to the 20-week moving average. And I'll show you what that looks like actually on IWM. So we already have that happening now. Okay, so let's see how this candle ends by the end of the day. Do we have some sort of pause here? We get this sort of candle, or do we go a little bit further to get more of a doji type candle after 3 o'clock power hour? All right, so looking traditionally, we had resistance right above here, and then we made a new high here, which created a divergence. Just a huge negative divergence building up here, and I think it's starting to play out. It's inevitable. It will. The only real question that we've been asking is this another 1-2 setup off of this 20-week moving average, and there's another 3, 4, 5, so another 3 waves up. I'm not saying that can't happen. The trend is still up. We're still above the trend line. So, it can. Divergences can build. They can constantly build on you. They've been happening since, my gosh, really, if you look at this peak to this peak, it's been happening since April of last year. So, in the weekly time frame. But then when those play out, they play out for a long time. The full cycle, and the MACD has to go through. So we're not looking for just a simple pullback. We're looking for a recession, as a matter of fact. Now, going to the weekly Southern frame here, we're in that mix where I said there was going to be a high. I think we already got it, but we're in that cluster. We're at it at highs, and so I'm thinking that we reverse from here. And I think we're in this time frame going to the 18th. I think this is going to be, since we have this kind of cycle going through here, I think this is going to happen quick. When it starts to break down, I think it's going to happen quick. Going into next week, I think we're going to have a big bar. We'll probably get some sort of, in the beginning of the week after, Monday or turnaround Tuesday, we'll probably get some sort of wick with a reversal candle, and then we'll look for a bounce. So I don't know how far this will go down, but this is a likely place that price wants to retest and get a reaction off. So you might see a wick all the way from 555 through the 565 area. Let's go down to the daily. And then we'll go to Qs, start from its weekly, and then we'll check out the other weeklies, okay? Actually, you know what? I'll stay on the weekly for all of these. You can see I have this well scripted out, right? I don't script out my videos. I just go. I just roll with it. You guys just look at the same thing that I do. So that's all I'm doing. Not trying to pull one over you. So we have this wedge forming here. Rejected off here. And just in this consolidation area. Haven't broken that zone yet. So we'll see if that zone actually starts to break down. It's just so much clearer on the Qs. Just this boxed in area here that price has been bouncing off of. So rejecting once again. Will it break out or will it break down? We're at that 20-week moving average again. So we'll see what goes there. SMH. SMH clearly much more bearish. Broke down from its wedge already. It's going sideways. I think it's forming a bear flag, rejecting off of the 20-week moving average. That's huge. Price has to get above here for any sort of market to continue to the upside. All right, we're already diverging negatively on the semiconductors, which lead the market, okay? So I think we had our initial move here, and we're forming a bear flag at this point, rejecting off the 8 EMA, and which is our momentum indicator on the weekly and all time frames, and the 20, which is our trend indicator. The trend is down. Even though everything's sideways, we're really just kind of back testing that zone here. So really good to look at these from a weekly aspect. Now we're in this massive zone here, right? You see the top, the bottom, they create wonderful resistance and support. I know we had a spike through there. Same thing. We had a spike through. We had resistance, spike through. Now it's resistance again, okay? So that's where we're at. Price needs to go above here. But it's the same thing as SMH. The small caps and semiconductors are saying we are going down. And the 20 moving average, the 8 EMA, both rejecting off it right here. And you can really consider this a move down. I don't know if it has to do it again, but the kiss of death is what we're talking about. You break below the 20 moving average and you come back to retest it. Now I know it got above it for a week, but we're back below it and rejecting so far. DIA. And DIA is just holding up well. I do want to point out that, and somebody reminded me in the Discord, I appreciate that, that this is the 2008 trend line. I don't have the information going all the way back there, but 2008 up to 2021 here. And that's where we rejected off of already. And so now just getting a lower high with a couple wick possible reversal candles here. And now we're in more of a positive situation with being above the 8 and the 20, but that can change very quickly. These are the Dow stocks, so they're likely to hold up a little bit better when other things are starting to dip because they get sold first. And the VIX. So the VIX overall in the big picture, you see this a bullish falling wedge, broke out from it, back testing, and now, you know, not just a simple back test and then you boom, keep moving like stocks do, but this one, just the same concept here. You see the consolidation that's been happening for quite some time, since mid of a little bit since August maybe of last year. Just a complete zone, bottom, top, and constantly doing the same thing. Boom, boom, boom. Yes, had some spikes through, but boom, boom, boom. All right. So that puts it in clear perspective of what's happening. All we're doing is just pushing off the bottom of that zone again. So let's go down to the daily on the VIX. Another perspective here is you have that, again, that falling wedge. This the top of that falling wedge, and we're getting pushed off of it, pushed off of it again. All right, so I think we're going to clearly reach the top of the zone. That is the MO right now, but we're getting a nice push off of there so far, and nice reversal, bullish engulfing candle. So, and again, we talked about these cycles. We're at the bottom of the cycle. We're a bottom could be forming here, and that's a good sign for us if you're bearish in the market that this is going to continue to the upside. SPY daily. On the daily time frame, a bearish engulfing candle here. You did have that reversal hangman candle, did peak above there to reach the resistance that we had marked, and is rejecting pretty heavily off of there. And so I think everything stands of what we talked about yesterday, and that we're going down here in a pretty fast fashion, all right, in that cycle down to about the 200 moving average. We have the 565 all the way to the 555 zone that we're looking to get to in a short amount of time. Now, I know things are playing around today. It's Friday. You have a lot of options that are expiring, and people getting out of their positions that are here expiring on Friday. So it's very choppy. It's also the beginning of, in the minute level, the beginning of, so it gets choppy in there and choppy, and then it starts to break down faster. And next week we'll release all that momentum, and I think one big weekly candle should do it. And then by the week after, that's when you have your 4-5s in the Elliott waves, to where you get down to your levels here. So next week should be pretty nasty for the market. But clearly, when we get down to this trend line, it's going to be an important area here. So we won't play around with fire. We'll put on some hedges, and I think that's going to be the clear spot. Even though we're in no man's land out here, and we're testing the bottoms, I think we'll get a reaction off of there. So I could imagine that this be, if you're doing an Elliott on a lower level, 1, 2, 3, 4, and 5, before you have the rest of your 4s and 5s here. All right. So I have two main ways that we've been looking at it, and we'll look at that on the lower time frame. But essentially, if you're bullish, you're looking for this trend line to hold, and you go for some sort of wave 3 higher. I'm not in that camp. I'm not going to change anything until we get above these trend lines here. I have the start of the count. I'm looking for this to be the top, and we have a 1, 2, 1, 2, and we're looking for wave 3 to play out. Now, if you're bearish again, or if you're bullish, I'll show you that on the other time frames. But I think the bulls and the bears, no matter what, are going to look for this 50% retracement, where the 200 moving average in that zone, 555 to 565 that I've been talking about, wraps around here in this area. And I think it will be fair that both parties will be looking for this entire move to correct, and they'll be saying this is a wave 1. The bulls will be saying this is a wave 2 correction. And that would be probably from the top here, where you'd say this is an A, because it looks like a 3-wave move, right? So A, B, and then a 5-wave move down here to into C, and then you have a new wave 3 coming. All right, so we have another time cluster here. It goes out to 220 on this time frame, and then out, well, we have a time relationship at 220, and then a little bit further out here at 220, about 228, 227, we have a cluster. So we'll see where price is when we go into that cluster, and we'll figure out, is that a reversal from the bottom, or are we somewhere higher? Let's go to the Qs. And we'll zoom through these. I don't have the time and price on these, but you see perfectly rejected off of the downtrend line here. Once again, I know news comes out. It's no coincidence that when you're at a critical point, news comes out and a catalyst happens, and we got a reversal off of that. I thought, hey, you know, this could be it. Did we start to get a breakout? And then when we're at this trend line, we got rid of our Tesla call hedges, a couple of us in the Discord, and it proved to be the right move. And really, we're just rejecting off at the top of the range here. And I think this will play out at minimum to the, I think it'll go to the trend line, perhaps get a reaction from there. But we'll see as price goes. This will be an important spot here, but ultimately, you know, I think we're going lower. IWM. I'm going out of order now. Okay, so another way to look at this, we have our trend line, been holding it, held it a couple times, fake break, and holding it again, but we're getting a reversal here. I do think this was a possible A, B, C into the 62% retracement, and we're getting a reverse off of that now. So in my mind, this is a 1-2 setup, and then we're looking for wave 3 to head lower for IWM. SMH. On the daily, trend is our friend. We made this bear flag here, and this is the same line that we were talking about rejecting from. So again, spiked through this and is rejecting off of there. But we had a megaphone type expanding ending diagonal here, and it worked out perfect. You couldn't tell what was happening until we really started to stretch out on this. And then we could tell that this was a 1, 2, 3, 4, and 5 wave move for a C to end this entire correction here. So it made it's really, you know, Elliott waves hindsight is 2020. But when you see it, you're like, oh, I see what's happening now. And just a massive rejection off of there. It's no coincidence. And it was the top of the bear flag and the end of this pattern where we got a reversal. And now this is a 1-2 in my mind. It's very similar to the small caps. And we have much further to go. DIA. And, you know, I'm putting all this information out there, so it's a little bit longer video. Play these videos at 1.25 or 1.5 speed so you can get all this information. I'd hate for you just to jump from one into the other and say, oh, we're bullish or we're bearish. Let's go, because this is trading the market. Is it if this happens, then you react to it and you do this. That's what happens with trading, okay? It's not I put on a position and see you, let it go. Right or wrong, doesn't matter who's right or wrong, it matters where you're trading, okay? And if you're trading against the move, then you want to make sure that you get on the right side, okay? So we had this channel here, back tested, and just made a lower high, and looking for a continuation, where I think this is a probably, and on the Dow, either an A, B, and then a C correction, or you literally have a 1-2 setup, very deep and going lower. I think that's more likely if it's going to follow what the market's doing. We already did the VIX, so let's end off doing the 65 on all of these really quick. All right, give you a visual to traditional technical analysis, and we have this trend line that's heading up here, and this megaphone formation. I think we test the bottom of that megaphone, but clearly we have to get through this spot here. I'm not even on the 65. Sorry. Here it is on the 65. So we broke down from this wedge at this point, lower high, lower high, lower high. Sorry, this was the peak, lower high, lower high. Broke down from the wedge here, and we'll see what happens. And I can imagine today we're just going to get a reversal type candle. But we'll see how the day ends. It really doesn't matter. It's not going to change my point of view unless we start getting new highs here. But we could just simply today back test that wedge before heading lower into next week. So like I said, we have a lot of probably options correcting today, closing out today. And as price goes down, you want to close out those options, right? Especially if you're barely, taking profit or getting rid of some of those dead options. So it's going to be difficult for this thing to continue to move lower. Although it could, again, 3 o'clock will probably be telling. Anything else to point on here? Yeah, this is a point of view of where I think trend line's going. That's from 2000, the 2000 top to the 2021 top. That's this dash line here. It's a little bit more shallow than the rest of them, but I think that goes perfect with the confluence of this megaphone pattern here. We're getting reversal off of this. We break down from the wedge. Maybe we go straight down to here, and then we back test for wave 2 and continue lower. That's what I'm looking for. If you're a bull, you're looking to get down to this point and head higher and break out. This line here, I mean, this is our time frame. And this goes out into March, but I think our time frame, I'm looking for that maybe February 18th to the 20th, because of those clusters that we have on the weekly time frame. I'm thinking that we make a fast move to that point. And so we want to kind of measure that here, and then we'll bring that to the, say, the 18th. So that, I know it looks straight down, but that's how things work when you get really bearish on things. So from the top here, so far that's a 7.5% move. Now I know that's not where we're at. We're at here right now. So we have another 6% to the downside. And, you know, really that can happen in 2-3 days. So a week doesn't surprise me when price starts to accelerate. And more than a week. I think it's 9 trading days. I want to say 10 trading days. Let's go see if there's some time factors in these Fibonacci's here. So this is what it looks like. I mapped it out where you have the bullish perspective on the turquoise, wave 1. Then you have an A, a B, and a C for an expanded flat. Here for wave 2, I think that's what people will be looking for a bullish move. But the bulls and the bears both will take that move together. So it should be a nice sharp move, dead cat bounce or rip your face off rally, and I think it's going to fail. But then we'll have to see what price tells us it's going to do. Now digging in a little bit closer, we had a peak here in this with that time relationship, and this one goes into the weekend here, so we'll just consider this the same thing. Clean up that board. What does Monday have in store here? I think more of a cluster going into the 13th, 14th here is one thing to look at. And then as we add more time prices, we don't have a whole lot of clusters. It looks sporadic at this point. It's nice when they all line up, though, with the daily and the weekly. So this initially, we have a 1-2-1-2 setup here. Now I want to show you something in comparison with the Qs. You have this relationship. I thought it was going to play out later on at the end of the wave, but it actually started to line up the SPY and the Qs together. Now we're both at a 1-2-1-2 setup, okay? And I'll show you, because this is the peak here. 1-2, 1-2, and these are such sharp moves because you still have buyers here. And then we get wave 3, which is projected. I have to change this projection because the price went higher. So we could get our wave 3 here, our first one on a minute level, at about the 576. So we'll keep that in mind into some clusters here. Maybe that goes into the 13th there. Maybe Monday could be very bearish, stretching into Tuesday, and we get some sort of reversal Tuesday. We'll see. Let's go to the Qs, and I'll show you exactly what I'm talking about. I was noticing this when it wanted to try to break out, and I was like, oh my gosh, I think this is actually just forming a flat pattern. All right, so here's, first of all, our point of view. We're looking at price getting down here at about 485, should be a good stop there, and we have a pivot there as well. I'm not going to spend too much time here. I just want to show that relationship. All right, so I'll change this with you now. Notice that we had our peak up here, and we've only been setting lower highs at this point. Well, I had this marked down as 1, and then expanded flat for 2, and then a 1-2, right? So that's a 1-2-1-2 setup. Instead of another 1-2, We barely reached over here. So now you have another flat pattern, and it looked perfect symmetrical wise, right? So you have an A, a higher low for a B, and then C just about the same distance from here to here. That gap, you know, do you see what I'm saying? Higher, but then a little bit higher in the same distance. All right, where A equals C. And that goes to here. So that's an ABC flat pattern. It's a beautiful flat pattern. Now, this is a impulse wave, and that's an ABC. So it's perfect. All right, so let's clear that up. And so now we're lined up to where we have a 1, 2, 1, 2. So this is going to resolve in the same fashion as SPY. And that makes me happy, because it's difficult to know, you know, how things are going to play out. And now they're lining up, and it's a beautiful thing. So sorry, it's the little things in life. So if this is an ABC, A, B, and then 1, 2, 3, 4, 5, however this plays out, you'll probably likely see the C come down here to the 493, and clearly the 100, that didn't make sense. So this, if we're looking at an ABC, if you're bullish, you're looking at the 100% move here, where A equals C, and we should get to about this 495 area. Okay, and if you are bearish, you're looking for a 1, 2, and this 1, 2, let's get a target on here. Grab your extension tool from the top of 1, the lower degree in the white 1, up to the lower degree 2, and you're looking at about the same distance. All right, let me clean this up. We're only looking for the 161 here, and I want to make it green, because that's where we should get a bounce. Same thing with that. Green. Now that makes perfect sense, because we're going to look for a reaction here off the 495. So I think that's where our next area is of interest. I think price gets there early or sometime next week. We get a wave 4 bounce, and then we continue to finish these structures. So 4, 5, 4, 5, and I'll continue to do those with you as price moves. I know we spent a lot of time on there, but I think a lot of people trade the Qs. So 65, just another look at this. We had the negative divergence here, megaphones type pattern, and I think this resolves to the downside. If you're bullish, again, if everything kind of fails, then you'll just look for a lower high here, and this is probably a 1, 2 setup, and you're looking for higher moves at that point. DIA. Nice big bearish rising wedge, broke down from back tested, and now it's getting a continuation. But again, you're getting these buyers here in the beginning because it looks like a beautiful 1, 2 setup, right? And you want to continue higher off of these. And lastly, the VIX. And here's what this looks like. You have the range that I was talking about getting really tight in here, and I think this is going to break out next week. You have these wedges that just define the range here. And even though price spikes up and breaks down from there because of the volatility index, go figure, is very volatile. Same thing just happened here. You know, again, I was thinking, okay, well, there's a breakout on the Qs. And SPY, here we go. And it decided, boom, it was just a fake break and moving higher. Okay. So again, this range play is still intact, and it's going to resolve, whether it resolves down or up. I think up. We'll see it happen in a fairly quick manner next week. And that's what I got for you guys. So hope all this helps. Don't forget to like and subscribe. Thank you for all the support, you guys. This channel is growing. Let's get this information out and make some money trading. Good luck.